Crypto in Europe is changing, and not just in price, because a brand new set of rules is now coming into force that will affect everything: how coins are issued, how exchanges operate, and even how much electricity crypto can use. It's called MiCA, the EU's Markets in Crypto Assets regulation, and it's the first time that Europe has put the entire crypto market under one single rulebook. This isn't just red tape, this is about reshaping the crypto landscape in Europe from the ground up. And if you own, trade, or even just hold crypto in the EU, then this matters to you. So let's break it down step by step and see exactly what's changing, why it's happening now, and what it could mean for the future of crypto. Before we get to the rules, we need to be crystal clear on what the EU means by crypto assets. Now, at its simplest, a crypto asset is a digital representation of value or rights. Something that you can send, store, or trade electronically. But here's the important bit, because crypto assets live on a distributed ledger technology, or DLT. Now, DLT is basically a network where encrypted data is stored and updated across multiple computers instead of one central database. So no single bank, no central authority, no one entity holding all the keys. And the most famous type of DLT is, of course, blockchain. So imagine a huge digital notebook, public, permanent, and impossible to tear pages out of. Every transaction is a block, and each block links to the next in a chain. Once it's there forever. You can check the record yourself without having to trust a middleman like a bank. And crypto assets are not just one thing. They can be used in very different ways. As currencies, Bitcoin and Litecoin are the obvious examples for making payments or transferring value across the world without traditional banks. They can be used as utility tokens, kind of like digital vouchers, giving you access to a product or service. They can be used as investments, so think tokenized ownership, profit rights, or collectibles like NFTs and artwork and things like that, or even a blend of these, which is where it gets kind of tricky from a regulatory perspective. And because these assets cross borders instantly, they don't fit neatly into old laws designed for banks, stocks, or even commodities. And that's exactly why the EU has stepped in here. Now, over the past decade, crypto has exploded in Europe like it has everywhere else. But here's the problem, because every EU country has been handling it differently. Some have been crypto friendly, others very strict, and that's created a kind of patchwork of laws that's messy for both investors and businesses. And this sort of uneven playing field has left gaps in consumer protection, people losing funds with no legal recourse. It's made it easier for bad actors to slip through the cracks and launder money, for example. And it's created kind of uncertainty for legitimate crypto businesses trying to operate across borders. And MiCA is the EU's answer. One single set of rules, the same in every member state. So MiCA officially passed in May 2023, and it's now rolling out, and it covers three main types of crypto assets. We've got asset reference tokens, and these aim to stay stable by linking their value to a basket of assets like multiple fiat currencies, commodities such as gold, or even other cryptos. And you can think of them as multi-asset sort of stable coins. The second classification is e-money tokens, and these are stable coins pegged to just one fiat currency like the euro, which is basically essentially digital cash. And then you've got other crypto assets, which is everything else that doesn't fit those first two categories, including unbacked coins and utility tokens. So if you're a crypto asset issuer or a service provider, that means that you run an exchange, a wallet, or issue coins. You now have some big new obligations, because you now need official approval to operate anywhere in the EU. If you do not have a license, then you do not have a business. You also have an obligation to not lose a customer's crypto. You are liable, full stop. You must also publish clear, detailed information about any projects or, token economics and risks and that type of thing. There's also environmental impact disclosure, because yes, some cryptos use as much power as an entire country, and regulators want the public to know this footprint. There's also going to be a kind of ongoing supervision as well by them. The European Banking Authority have said that they're going to maintain a public register of bad actors also, which is basically a blacklist. So for the everyday investor or trader, then MiCA can mean more safety when using EU licensed exchanges and wallet providers, easier cross-border trading within Europe, more transparency from the projects that you invest in, and potentially fewer scams slipping under the radar. This is what the Europeans are arguing. But it also means that you might see some coins delisted as well from EU platforms if they can't or won't comply with the new rules. Now, the EU is really trying to sell MiCA. They're telling us all these wonderful things about it, that it's going to provide legal certainty where there was none, that it will actually encourage innovation, that it's going to protect consumers and investors, guarding against financial crime and things like market manipulation. And it's also a global first, really, when you think about it, because no other major economy has such a comprehensive crypto law. So that means that the EU could become a blueprint for other regions. And if MiCA works, don't be surprised if countries like the EU, Canada or Australia adopt very similar models. So the EU has one rulebook for the entire crypto industry, and it's called MiCA. Some see it as a moment for crypto in Europe to grow up. Others, like me, fear that it could choke innovation because it is very strict, under all these layers of bureaucracy. What do you think? Will MiCA make crypto safer and stronger in the EU, or push projects to set up shop somewhere else? Drop your thoughts in the comments, and don't forget to subscribe for more updates on crypto regulation in Europe and beyond. Thank you for watching, thanks for listening, and I'll see you in the next one.